Good afternoon, folks. I hope everyone's doing well today. I'll be discussing Bollinger Bands and also just having a quick look at a general market overview quickly, and then we'll discuss Bollinger Bands. Probably one of my favorite on-chart indicators. One of the few that I use, but we'll have a look at that closely. We've been discussing lots of different type of strategies over the last while. Well, actually only one strategy. ABC, support and resistance, candle info. Those three very basic things. That is our strategy. We wait for a trend to develop, or we try and identify a trend. If there already is a trend. If there's no trend, we wait for a trend to develop. That's the first thing we want. That is the very basic thing that we teach you on the course. Higher highs followed by higher lows. Very simple. Or we have lower lows followed by lower highs. Okay, the very simple thing that we need. This is our starting point. Okay, the second thing we want is support and resistance. Okay, now there's many different types of support and resistance, or different ways of looking at support and resistance. Let's rather put it like that. You could have a high, keeping a low up. Okay, a high keeping a low up. So this is what we call resistance turned into support. Or you could have a low keeping a high up. Okay, if the market's made a lower low and a lower high, that's support turned resistance. Here we have resistance turned support. That would be support turned resistance. Okay. And then the third thing we want is nice candle info. Okay, C info. That's what we need. We need those three things. That's the very basic. There's lots of other things to look at, as you know. We could be looking at all sorts of reversal patterns. But at the end of the day, the most three important things is what we have up here. Either identifying a trend or waiting for one to develop, having a clear area of support and resistance, and having candle info. Sorry, with support to resistance, we could also have a high keeping a high down. That is then we call supply and demand. Or a low keeping a low up. That's what we call supply and demand. So a demand zone, okay, would that point be? And that point over there would be a supply zone. When a high keeps another high down. When a low keeps another low down, that's a demand zone. Okay, so there's the two separate type of support and resistance. Okay, so right now what we're seeing here we're seeing a high keeping a high down. Okay, so that is a supply zone. Okay, supply. If this low keeps price up when it gets here, that would be a demand zone. Okay. Here we have support, resistance turned support. There it was resistance, there it's support. Okay, so this is what we call polarity. The proper word for it is polarity. Okay, excuse my handwriting with this thing. Polarity. Okay, when this happens, support turns in resistance turns into support. And this is what we call supply and demand. Okay, so both these areas are valid. Both of them are valid areas to trade from. Here we had support turned resistance over there. Here we have support turned resistance turned support. Look at those points over there. Okay. So not that it matters as long as you can identify them as support and resistance. That's the most important thing. That you can identify what is what. Support and resistance. Is price going to be kept down? Is price going to be kept up? Okay, that's the most important thing that we need to take into consideration when we are, no matter what strategy we use, if we're using moving averages, Bollinger Bands, Keltner Bands, all the different type of settings of moving averages that you get. It doesn't matter. As long as you can get that recipe right, whatever setting of moving average you are using, whatever slight variation of an approach you are using, all of it will be null and void if you can't get your price action right. Okay. If you get your price action right, you can get almost any combination of moving averages working, as long as, of course, you can see that it has worked in the past. Okay, I'm not saying you must take any outlandish setting and try it, but as long as you can go do back test and see how it's worked in the past, then it's worked. But then it's all to do with your ability of price action. So we'll get back to Bollinger Bands in a moment. Let's just have a quick market roundup. On the Euro USD, we can see price currently trading below the resistance like it's been for a while. And as you can see, price has been really attacking this level very aggressively, and we've had a lot of sideways action going on over here. So that's why we are still bearish, and we've only really been selling it. We haven't been looking at a buys here. We've only, from an intraday perspective, been looking for sells. Yesterday we did a little short here. We shorted this low yesterday over here, and price went all the way down to around about there. Okay, I only took 17 pips out of this, but I think it went a lot more. It went 32 pips in total. Okay. So yeah, that's basically it. It's trading under resistance, so we're still bearish. Okay, if I go to my 1 hour chart, I can see this little sideways wedge building up here. Normally when the market is wedging like that, it breaks in the direction of the trend. So right now she's kind of in a selling area. Okay, if this level holds, price might bounce back down here to this level, more or less on this line. Of course, if she takes that low out, I think there'll be more lows on the cards. Okay, so our bias remains bearish as long as we can see what we're currently seeing on the daily chart. That's our daily chart is our indication of what could be happening, of where the market's going. And then we're just scaling down to a 1 hour chart to look for an entry. Okay. Fantastic. I also see kind of like a harmonic pattern in here. Kind of this W pattern. Now if these W patterns actually work properly, they're supposed to take the bottom of the pattern out, which is this low where my cursor is right now. Okay, so this wedge could well break down and come down to this level over here. Okay, trend is down, so if we back anything, we back the trend. Pound dollar, same thing. Yesterday, a very strong close. I almost took this short as well. I should have just taken it. There was a lot of news coming out for the pound yesterday. And once again, it's just another example of we shouldn't be scared of trading the news if we have a very good setup before the time. Now, this is a brilliant bearish engulf. Yeah? Price could test into this bearish engulf and break down again. If we go down to our hour chart, we can have resistance over there. There we have support, potentially resistance. Or right up here where this blue line is, we have a supply zone. This whole area I would view as a supply zone. So yes, yesterday we had this divergence setup happening. Yeah, these 2 points, like an extreme divergence or like a double top. And if I look over here, I could see the diverging points on my stochastic as well as on my MACD. Okay, so you could have shorted this breakout of this low. Okay, we discussed this in the chat room. Oh, sorry, we didn't discuss it in the chat room yesterday. There was no chat room. But we've been discussing these type of setups in the chat room. I remember Monday, we called this thing as well. Was it Monday, right? This was last week, sorry. Last week we called that in the chat room. And of course, on Monday we called that in the chat room. Those 2 bits there. Okay, very similar. Bang, bang, bang. Trend is down. So when you do breakout trades, always back the trend. It's very easy now for us to go do a breakout trade here as well. And we can. It's very possible for us to do breakouts here as well. It's the more riskier ones. So when price was messing around like this, we could have used that as a breakout point to go long. But it's against the trend. So you could. It's up to you. It just takes brave trading to do that. Okay. So right now we'll wait for a retrace to there or there. That's our next trading areas on this pair. The dollar yen is it's very high, of course. It's very overbought. We've got this Harami effect happening here on the candle, which might mean price is tired, or it does mean price is tired. That's what the Japanese calls it. Tired price when the market gives us a pregnant candle. This is the mother candle and this is the baby candle. So price is quite overbought, and we have this indecisiveness that's currently happening over here. The 1 hour chart is a bit messy. It is a bit messy here. There's all these points here, but this could potentially here be a head and shoulder pattern. If you look at this over there, now we just need another point to rest this on, and then we could have this head and shoulders pattern over there with the market breaking those lows for a short entry. Okay, now measured move. If you trade head and shoulders, you would normally take the width of the structure, and more or less that is how far she could fall. Okay, so that's one to look out for. It is a bit messy, but because of this indecisiveness here on the daily chart at a very high, it could be worth a go, but this is definitely against the trend. So we'll keep an eye on that. I don't know if I'll actually take that though. The dollar, Aussie dollar, it's been trading below this level for a while. It's gone back in here. It could just be a correction though. Okay, just because she's back in this area doesn't mean that she's going to go up. She really has to start making higher highs and higher lows in the daily before we would really think about bullish moves, and that high must be taken out at least. Okay, she could be pulling back and giving us a trend line here. She could be. If we get a pull, if this is just a pullback and she goes down to make another lower low, then again when she comes back to this trend line we could have a third touch. So yeah, we definitely still bearish here. She did set up a head and shoulder pattern here, but that did not pay. It did not break. Okay, we would have, of course, a break of this level here, this blue level would have been the entry point for short there. The dollar CAD also looks like it could be, and over a period of time, be setting up a head and shoulders pattern. Of course, will take it a while to do it, but something like that. That'll be a nice long-term trade because this is a daily chart. So something to look out for in the future. Okay, right now, of course, price is still a bullish. It's mostly bullish. You could have done a few sells here the last couple of days because the daily candles, as you can see, we had a bearish day there, 2 bearish days. And on the 1 hour chart, we did have lower lows and lower highs. Here we had this, take that low point out there, lower low, lower highs. Right now, lower low, lower highs. So she has been trending down on the smaller time frame. So from intradays, we could have done a couple of sells here on an intraday. Long term though, it's still very bullish. Long term outlook. Weekly, we've spoken about this many times already. It's got the weekly divergence happening over there. So there is a long term sell opportunity, but we would wait for the head and shoulders to build up. Seeing that there is potential for it, I would rather wait for that head and shoulders to build up there. But like I said, that's still a lot of price action. So for all intents and purposes, long-term direction is still bullish. Intraday, we could have done a few short-term sells. Okay, and that the guide for that would have been this bearish engulf, for instance, and this being the retrace. This area here. This area here being the retrace. That's the bearish engulf. Now test of the bearish engulf, and now it's actually paid. Okay, so at that point, you could have on the 1 hour chart, have a look what happened. Lower low, lower high, diverging effect, break of that low. Okay, that's how we trade divergence. Okay, break out of the low point. Okay, once again, this is a measured move. So the width of the structure is more or less your target. Okay, and as you can see, she did fall more or less that much before she pulled up. Okay, and then of course gave us another entry point here for a lower low. Okay. We spoke about this at mentoring the other evening. We had a great harami, and look how price closed below the harami. Now we're having a shooting star. So if today closes like this, this is the perfect. This is what we are looking for with an harami effect. So this is the harami effect. This candle keeping all these other candles prisoner, or being pregnant with all these candles is the official term, the Japanese call it. Harami actually means pregnant. Now closed below the harami range. Now we need another candle to give us a shooting star, preferably that tested the range, and so there we have it there. Also, it's a little bit of a head and shoulders effect here on the euro ord. So for you long-term traders out there, this could be a long-term trade. Okay, so when we just discuss mentoring again next week when we're online, we will have a look how she went. Okay, for you long-term traders, something to look out for. We've got this very strong base of support here on the euro CAD. Very strong base of support, but the bears are really attacking it, as we can see with this triangle effect that the market has created. So we've been discussing this one for a while already as well. It had an old one that broke, and now it's setting up another one in that area. So she could well break down. The way of trading this is a strong close below here on the daily, below this level for a short. Of course, if she breaks up here, gives us a retrace, lower low, lower high, good candle info, using one of these highs as support, then she's going to break up. Then we're going to trade her up. Then it's normal A, B, C. Okay. The pound Aussie also, we had this Harami range. We spoke about this at mentoring. She closed below. Now she hasn't tested the Harami range, which is unfortunate. I'd like that point to, of course, touch there. But just once again, she closed below and she's falling. So, good candle info. That's how we trade candle info, except in this instance, we did not get a confirmation. You could be brave. When she closes below an Harami, just take the trade. If you did that, you would be up already 130 pips. Okay, if you did that. She did give us this little initial retrace, which is interesting. She gave us this initial retrace today. So you could have shorted, of course, the bottom of today when she fell through after initially going up. That's a daily breakout. Okay. The pound franc, we also have this head and shoulder effect happening over here. A strong daily close below at the bottom would be our trigger. The USD franc, it's got a weekly chart. It's this third touch on the weekly chart happening over there. This downtrend. And if we go to the daily chart, we actually have this diverging top happening over here. It's diverging effect, bearish divergence. So this looks good for a potential long-term sell. We need a strong daily close below here, or a break of that level. Like if price goes lower than there, you can basically, if you were keen to take it, just do a short, or do a break pending order when she takes that low out, a few pips below, maybe 10 pips below on the daily, because it's a daily chart. Okay. Having a quick look at the Rand. The Rand is also testing a demand zone. She has rejected from that demand zone. Yeah, that's nothing more really to say about that. She has made lower lows here. She took out these lows and took that low out and made a lower high. So you could think about shorting it, although the candle info isn't ideal. Why do I say that? There we have a bearish engulf, but it fell down and gave us a hammer after the bearish engulf instead of going up and then giving us a shooting star. That would have been great candle info. Right now, when I look at these hammer looking candles, yeah, if I look at the points, there's support, resistance turns support. That's why I would have preferred a shooting star like this type of candle, but over here. So if we had a repeat of this candle, but in this one's place, it would have been that would have been very good candle info to go short there. Okie dokie, guys. I'm going to move on to Bollinger Bands. Yeah, I'm just going to go. There we go. Just going to bring up a plain old chart. Plain old chart. And I'm going to insert indicators, Bollinger Bands, standard period of 20, standard deviation of 2, apply to close as standard. Okay, there you can see the Bollinger Bands, these grey bands on my screen. Okay, now these bands, there are 3 of them: upper band, middle band, or the mean. Okay, the mean is the middle one, and then the lower band. Okay, so the very basics is when price is touching the upper band, it could be overbought. When price is touching the lower band, price could be oversold. Okay. When price is rejecting off the mean, it's usually in a strong trend. So when price is rejecting off the middle one, that normally means there is quite a strong trend in effect. So where can we see an example of that? For instance, here you can see the strong trend. There you could see it rejecting off the middle. Here we had a strong downtrend, and here just under the mean she rejected. and here just popped over, but she's still rejected off the mean there, and all along here a strong up move, and she is bouncing off the mean there. Okay, so the mean could act like support or it could act like resistance, whereas the outer bands are always either support or resistance. The upper band is always resistance and the bottom band is always support, and like we say, it is overbought, oversold. Okay, the ideal area, of course, is to trade from the overbought and oversold areas, but there are some very nice with trend trades, like I said, strong trend that do bounce off the mean. But the best trades are the ones that really go, are the ones that come from the overbought and oversold area. Okay, as long as you can establish a trend by the time it's bouncing off those areas. To give you an idea, over here we saw price touching, so all along here it's touching the mean, okay, and then eventually it's set up this candle info over here. Okay, it created what we call a diverging effect or a double top with divergence. Now if I enter in a stochastic, if I enter in a MACD, okay, if I enter in these babies, when this happens, when price touches the upper band or the lower band, it is best to have a diverging effect happening when price is rapturing these levels. It just really makes the odds in your favor. It could be very fine as long as you can see it. If I just look at these tops, they're all more or less equal, but on the stochastic it's clearly price is going down. Same with here on the MACD, you can see on the histogram bars, price is running down. So that's a very important thing. Yeah, also you could see when price got overbought here, oversold I mean, from here to there. You could also see that on the stochastic we had divergence, and on the MACD we had divergence. So very important that we have that whenever we are trading from the overbought and oversold areas. That's not necessarily the case when we trade from the mean. For instance, there we had a mean, the price bounced off the mean and it went down. So from the mean you don't necessarily have to have divergence, but what could put the odds in your favor when price is bouncing off the mean is hidden divergence. So hidden divergence is the opposite of bullish divergence. Now the trend is supposed to continue, right? Instead of reversing a trend. Okay, so now the points are just going the other way. Okay. So let's just have a look. Well, how can I find a place where it's, you see here we have a diverging top. Okay, if I look at the MACD at this point, same point, it's going down. So here it's going up, on the MACD it's going down. Now it's the opposite way around. On the charts now it's going down, and on the indicator it's going up. Okay, that's what we call hidden divergence, or what I would just call with trend divergence. Okay, so when it's bouncing off the mean, it's always a good idea to have that. Here we could see it as well. Here it's bouncing off the mean. If I look at it's also diverging with the same points on the stochastic indicator. Okay, so that could put things in your favor by looking out for overbought, hidden classical divergence for overbought areas, and when you're trading with trend, a hidden divergence to put the odds in your favor. I think next week we'll do a divergence session just to get everyone on board with divergence again. This is just the basics of divergence. So we get extreme divergence, which is a double top or double bottom with the points on the oscillators going down, any oscillator indicator really, stochastic, MACD, RSI, momentum indicator, okay, quite a few that can show you diverging effects. Or we have the bullish divergence where lows are going lower and highs are going higher on the oscillator. On the charts, lows are going lower, but on the oscillator, lows are going higher. Okay. And then, of course, the hidden divergence is just the opposite. Just the opposite. Now, on the chart, the lows are going lower, the highs are going lower, but the oscillator, the highs are going higher. And for bullish hidden divergence, the chart, the highs are going The lows are going higher, and on the oscillator, the lows are going lower. Okay, so that means in an uptrend, there's big volume. Okay, this means, okay, in a downtrend, there is big volume. Okay, this means in a uptrend, volume is running out. In a downtrend, sorry, volume is not running out. Yeah, in an uptrend, volume is running out. That's why we have classical divergence. Classical divergence means volume is running out in a direction, and hidden divergence means volume is picking up in a certain direction. Okay, so that's the basics of Bollinger Bands. Using the Bollinger Bands with divergence, it's a very, very important, I would say, filter to help you with these overbought or oversold areas and the mean. Okay, so what you could do as well, so what you can add in to help you insert indicators, you can insert a moving average with a period of 50. This is a very standard industry way of doing it, which I'm teaching you now. A simple moving average with 50 is a slightly slower moving average, okay, than the 21 that we're normally used to. The 21 moving average is very similar to the middle line of the Bollinger Band, which is quite following the trend quite strongly. 50 is slower, so it shows you a bit more longer trends. I'm going to make that a different color. And period 50, simple, close. Okay, so that could help us to determine what the trend is. Okay, so the ideal would be to sell with the trend, of course. Okay, to buy with the trend, sell with the trend, buy with the trend. Here we could see where price was testing the trend. Okay, testing the support and resistance over here, and touching the outside Bollinger Band, giving us divergence, also right in line with the trend. Okay, now I'm going to, so this could be useful, and I'll show you now how to use this properly. Okay, so over here, yesterday, we had this diverging top, a really nice diverging top. It touched the outside Bollinger Bands, and then it made this block before it crashed down, this blue block, which is a supply zone. Now, although price was above the 50 moving average, which means price trend is supposed to be down, don't just use the 1 hour's one. Go to your 4-hour charts, and you'll see at that point in time, it was below the 4 hours moving average. So that is really, really very important. Not just to use the actual time frame that you're using's slow moving average, but also using the two above it, the 4-hour and the daily, for instance. Okay. For me, use the 3 best charts to use. 1 hour, 4-hour dailies to use those charts to just decide what's going to happen next. And if you can use them together properly, you will win much more than you lose. Okay. So at this point in time, we had this perfect. This was really a very good trade. Okay, if I look to the side here, just look to the side, we'll see here we had a support that was turned into resistance. The same that sent price packing over here. Once again, same thing. Here by this blue line, price got overbought. It was a lower, lower, lower high. Okay, lower, low, lower high. Go to my 4-hour chart. It's definitely under the 4-hour and the daily's 200. Moving average. Okay, all along here you can see on the 4-hour chart, everywhere here you can see we made all these marks here for where price breaks down. Okay, so all along here, and on the daily, of course, I'm just going to go to the daily. All along here we've made these marks where price has gone down. All along the daily it was below. So even though it is not in line on the 1 hour, you must just go and check if it is in line on a bigger time frame. Okay, so at this point it was definitely with trend. Even this, it's definitely with trend. The big trend, if you go to your 4-hour and your daily, is down. So this is definitely not a counter trend trade. It looks like a counter trend, if you just look at the 1 hour chart. But that's why you've got other time frames as well, is to establish proper trends, not just what you see on the actual time frame that you're observing. This was a beauty. This was definitely with with trend on the 1 hour as well. There's clear support that's turned into resistance over here. There, okay. Let's just draw it across there. Just slightly goes over, slightly goes over. Also look at these candles here. It stopped before it dropped. Okay. Very important. Then again, yeah, this was a perfect. This is with the trend. Lower low, lower high. Lower low, lower high. What happened is the price created this block. Okay, what we've noticed with these blocks is when you get a fresh block, so in other words, you see the block just being created, and you got your price action ducks in a row, A, B, C, support turned resistance, and now a blue block appear. Okay, before prices run away, while it's still here. Okay, that could be a trigger. The blue block just appearing over here. Of course, when it comes back into the blue block later on is where you can look to trade it again. Or you could trade it a breakout. When we trade breakouts, best to trade the breakouts with a trend. So that low point, taking that low point out, would have been a breakout. Okay, so many different ways to trade it. We've been doing a lot of these on breakouts, of course, by taking these lows out, that low out. Okay, taking that low out there. Okay, that low, those lows, those are good breakout points. Okay, trading against the trend with breakouts is more, of course, is not the best idea. Unless you're brave. So lots of people do make money, good money out of counter trend trading. Here we have a very sideways market. And Bollinger Bands are actually good for sideways markets. You can just, if the market's not making clear lower lows and lower highs, it's going messy sideways. Every time it gets to overbought, oversold is where you would trade it. As you can see, it's just bouncing in between overbought, oversold here. Okay. We had this fantastic head and shoulders a few weeks ago. Now, once again, at this point in time, I go to the daily. Okay, I'm now shut. All these red lines, as marks I made before. Okay, you can see it's under the yellow line. It's under the slow moving average. So the trend is still down. Okay, I already looked at that all along the 4 hour. Yeah, the trend is down. Here, where we had that head and shoulders, it actually went above on the 4 hour, but it was still below the daily. It was still below on the daily. And in fact, it was overbought on the daily. It was in a blue block in the daily. Okay, so at that point in time, there was lots of reasons to have taken that trade. We were, of course, nervous. We did short it. We jumped out because of news, and then she fell down hard. So there, we dropped the ball here a bit. Okay. Here we have a very strong trend where the market's making higher highs and higher lows. Okay, there we have resistance turn support. Also finally, of course, okay, clearly above. So here, trading with a trend, it's clearly above. This is quite a nice setup over here for trading it with a very strong trend. Yeah, she's made a lower low, lower high. There we had support. That could now be resistance. A nice candle info. We had a very nice shooting star. That confirmed a bearish engulf. That is a fantastic signal. We've spoken about that type of signal a lot in mentoring. Okay. But once again, you're getting all your other price action ducks in a row. Now you get this. It just makes it just gives your trade so much more power when you're waiting for good candle info and you've got the rest of your price action ducks in a row. Over here we can see a strong trend up, here using the mean as support. Okay, and then of course look at this point where it bounced, look to the side. Okay, resistance turn support, here again, so this is a resistance turn support, made a higher high, came back, tested this now as a demand zone and went up again as well. Okay. Going to go to the euro dollar chart, euro dollar. Price is going a bit messy here now, but we know the trend is down. We've spoken about it quite a few times today. Yeah, it's now oversold. Okay, so we now want a bit of a diverging effect happening here to sell it. Candle info is building up, but we would need some type of a diverging effect, which I can't really see yet. It's not there yet. Okay. Yesterday, this is a lower low. It took that low point out, lower low, broke this little trend line, of course, if you just had to use that as a trend. Lower low, lower high, testing this blue block, built up. So when it goes overbought with the Bollinger Band, diverging effect, and although it's above the yellow line, okay, if you go to your 4-hour chart at that point in time, it was testing the yellow line. And of course on the daily, all along here, it's below the yellow line, okay, below the slow moving average. So that's really as simple. Whenever you want, if you're unsure, if it looks against the trend on this, you go to your higher time frame. Okay, so don't let the moving average confuse you sometimes on the lower time frames. Okay, use your bigger time frames as well. Here we had a very nice one, A, B, C. Okay, A, B, C. Then it's creating this diverging top. Okay, after going overbought with the Bollinger Band, creating this diverging top. And once again, you could have just traded the breakout, taking this low out. And as you can see, she fell quite hard. Hey? This also might have been a trade we did in last week. I think so. Okay. Let's have a look, see where else. Ah, yeah, we had a nice setup where it bounced off the mean. Okay, and if I look at the if I look at the stochastic here, we had definitely had a hidden divergence. A hidden divergence from that point to that point. There we had support, turned resistance. Okay. Also yesterday, or a couple of days ago, it came up, went oversold. It didn't give us divergence, but there we had support, turned resistance. And once again, although it's over the yellow line here, it's below the yellow line on the 4-hour and the daily. Okay. No diverging top though, so we wouldn't have taken that one. Here as well, here we had a great diverging top. It was definitely overbought, and at this point in time, there this red line is on the 4-hour and daily. It was definitely below the yellow, below the main trend. Then all along here, look how the market's trending. Here she's bounced off, actually perfectly off the moving average. And if you look to the side, that's the demand zone. A low that's sent price up, that's keeping the current low up. Okay. Also a very nice example of when it's trending strong, made a lower low, a lower high. There's support turned resistance off the mean. Okay, under the yellow line. When you're trading like this, off the mean, on your time frame that you're trading it off, you definitely want it to be below the SMA. So only when you go to the overbought or oversold, that, for instance here, it was overbought, created the diverging top, and then it fell down, or actually it didn't create divergence in this example. It didn't have a proper diverging point. What we did have though is great candle info. We had a bearish engulf over here, and then this block created. Okay, this block, after this block got created, price went to touch it and then it dropped. So just after you see this block appearing, if you have the rest of your price action ducks in a row, but that's a bearish engulf there, and here with this bearish engulf confirming that bearish engulf. So that's your double candle info. Okay. Also, once again, extreme divergence here. This extreme top, like a double top, triple top, with this diverging effect happening. Okay, going outside the band and then building it up, touching the band. Okay, it just needs to go outside once and then go sideways for it to count as overbought. Okay. Okay. See if we see anything else. Dollar yen. Here we had a strong trend. A, B, C. Okay, higher high, higher low, bouncing off the mean. Look to the side, support turned resistance under the yellow line. Okay. Right now we won't even look at any of these cells because everywhere on the daily and in the 4-hour, the price was bearish, bullish. The price is above the moving averages on both the daily and the 4-hour for a very long period of time. So none of these cells were really anything we would have considered. We only would have considered the longs because on the 4-hour and the daily, price was above So there we only look for longs then. We're just using our 1 hour chart to fine tune our entries. Here again we had a nice ABC setup, A, B, C, resistance turned into support. Okay, in this instance she actually went to the overbought area. She actually went to the overbought area, and did we have divergence? Let's just look. Not really, eh? In this instance we did not have diverging, it was the same. So probably would not have taken this one. Okie dokie, so let's get back to what's the basic rules that we are looking for when we are looking at the Bollinger Bands. Just wrap it up quickly. So we want price in a bullish market, we want price to go oversold. In a bearish market, we want price to go overbought. Then we look for, so in this case, this is of course the yen. We only are looking for buys on the yen, because on the daily, you can see price is well above. On the 4 hour, price is well above the moving average. So now every time the price here goes overbought, and we get a diverging top, this is almost like a double bottom. It's not quite double, but I would have counted that. Okay, our diverging top. Okay. Then we can look at candle info. There's double candle info, a bearish engulf followed by a bearish engulf, or a breakout. Okay, in this case I would not have taken this breakout, because look how far the point is. That isn't, sorry, that's another important thing that I haven't said yet. When you trade breakouts like this, it's best that you trade the breakout if the breakout point for selling is either by the mean or above it. If the point that you want to trade as a breakout point has bounced off an overbought area or oversold area, then it's not a good idea to take the breakout. So this is a good breakout point. Okay, so in an uptrend and a downtrend, that's a good breakout point. Okay, let's look at if we can find a good one in a buy market. There's not really been any in a buy market of late. Can't really find one now, but it's exactly the opposite, of course. I don't think I'm going to find one right now. This has just been very, very bullish. For instance, here in an uptrend, yeah, this point, okay, if you wanted to do a breakout, that point is in an uptrend. That was a better breakout point, okay, because it was just above the mean. It was by the mean, okay. So basically, anytime you want to do a breakout, just check where is the point. Is the point touching the mean, or just above or just below the mean? That's okay then. Then it'll make your breakout trade a much better trade. But if your breakout point is touching, so instance here, this is not a good breakout point. This low point here is not a good breakout point. Okay. Okay, this is a good breakout point because price is well above the mean. Okay. This was a good breakout point because price was by the mean. All these points are not good breakout points. All these lows here are not good breakout points because they come from the oversold area. This is a good breakout point because it was by the because it was by the mean area. Okay, that's not a good breakout point because it's at the overbought area. Okay, this point here could be a good breakout point, but it's in a downtrend. Okay, so it's totally against the trend. Okay, but there is a breakout point on the mean. Okay, that's not a good breakout point now. Yeah, that's not a good breakout point anymore because it's gone overbought. Okie dokie. So the very basics of this is you either trading with a very strong trend and then price would bounce off the mean and you would have support turned resistance. A very strong trend, okay, where we have support turned resistance, good candle info, okay, and then of course short. Or a very strong trend where price is bouncing off the mean and you have resistance turned support. Okay, with candle info, this was a what we call a a piercing line followed by another piercing line, which could have acted as your confirmation over there. If you're waiting for double candle info, there was another one confirming it for you. Okay, so that's the one way, trading with a strong trend You're trading off the mean. You need support turned resistance or resistance turned support with good candle info. Okay, or you could be trading with from the overbought and oversold areas. Okay, like we did here, but trading, this is our favorite ones, is trading off the overbought or oversold areas, as long as it's with the trend on a higher time frame, your 4-hour or your daily chart. But still, you need that price action. You need that price action to go, okay, where was there a lower low, lower high? Now this becomes the insignificant high, that becomes the false break point. But not, that's a lower low. Okay, take out that's low. This is a lower low. That's a lower high because it's lower than that high. Okay, and on the higher time frames, it's definitely below the 50 moving average, definitely. So now we want, once we have this recipe, okay, overbought or oversold, it's definitely on the higher time frames, either above or below. It's in line with my higher time frames moving average. Now I'm waiting for a diverging point to occur, and I pick a breakout point in between the two diverging points. That point is diverging with that point. That's the point in between. Okay, and as long as this point is either on the mean or just above or just below, this point must not have touched the overbought area. If it has, then it's not a valid breakout point. Okay, it's just a very risky one. Okay, I was a bit eager yesterday with my Aussie. I did a breakout trade yesterday with the Aussie. I really thought she was going to go down to this blue level over here. I took my breakout there. She went down a few pips and I got burnt on this one. This one I got burnt on. And that's because look at where the breakout point was. The breakout point was on the overbought area. Okay, on the overbought area. Okay. Okay, so the very basics. Very basic. Okay, so firstly, wait for overbought or oversold on the BB bands. Okay, this is the favorite recipe. The favorite recipe. Okay, that's point one. Point two is establishing the trend though. Checking, is there a trend? Is there a trend to support my trade? Okay, excuse my handwriting on this thing, it's funny. Okay, is there a trend to support my trade? Okay, go to look at your higher time frames. If you can't see the trend, if it's not clear the trend on your time frame that you're observing it, go to the higher time frames to observe it. Then three, you need to see if there is support or resistance. Okay, usually when you're following this recipe, it's in supply and demand zone. So a previous high keeping the current high down, or a previous low keeping the current low up. Okay, that's usually the case when you're going the overbought, oversold route. Okay, so then the fourth thing, okay, you can either wait for candle info, okay, either candle info or a breakout point. You pick a breakout point, okay, or a breakout point. Okay, so point 4 is breakout point. Okay, so in a down market, that would in a sell if scenario, this the break of that low would be your breakout point. In a buy scenario, the break of that high will be your breakout point. Or you could wait for double candle info, of course, at the tip that you're trying to trade it from. Double candle info. Okay, so that's a very simple one. One is overbought, oversold. Two is the trend, establishing the trend. Three is checking the area. Is it a supply and demand zone, or is it support and resistance? And point 4 is either waiting for candle info or identifying a breakout point. Okay. If you're trading off the mean, then first of all, you wait for price to reach the mean. Okay. Point 1 is you wait for price to reach the mean. Okay. Excuse my struggle to write with this thing. So you wait for price to reach the mean. And then you establish the trend. Again, this is all the same. Okay? This is all the same. One is the mean. One is the mean. Okay? The mean. Okay, one is the mean. 2 is the same as the others. 2 is trend. Okay. This is the trend. I will find another way of writing this in the future. Okay, 2 is the trend. Okay, ABC, is there a trend? Now when you do this one, you definitely want it to be on the time frame you are looking at, under the moving average. Okay, when you're following this route. Okay. 3, of course, now there you would have support turned resistance. Now this is definitely the other way around. Now you probably have this effect. Okay, a previous high, previous low keeping the high down, or a previous high keeping the low down. Okay, that's the definitely then for this one, when you're trading with the mean, you have to go that route. And then point 4 is candle info. With this one, we're not going to identify breakout point. You can, but it's now with trends. So a good candle info is all we need. Okay, some good C info. Okay, some good candle info. And that's it, guys. The absolute basics. You're either trading it from the overbought, oversold area, or you're trading it from the mean area. But in all scenarios, you are establishing a trend. You are establishing support and resistance. Okay, the very basics of what we teach you on the course. The most important aspects of what we are teaching you on the course. Thank you very much. Have a lovely day.